Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. Oil is king in my opinion. I'll explain why in just a moment. First, we'll go through the SPY analysis. SPY bulls still have control at this point, still believe they're overextended. I have entered the last 2 days day trading saying I'm only scouting bearish positions. If we don't get a bearish setup that I like, I'm not going to trade today. And that eliminates a complete half of the spectrum to be looking at. And that has allowed for opportunity 2 mornings in a row. Obviously, the bulls have bought the dips 2 days in a row, but it has allowed me to lock in profit and put stop losses at break-even positions. Today I traded LABD, got a really nice entry, and put my stop loss at break-even, went to lunch, got stopped out, and I'll try it again tomorrow. So what I'm going to be watching for is a loss of the hourly uptrend. At this point, the hourly uptrend remains intact on SPY, and we're starting to shift a little bit of momentum. We had a lot of volatility in reaction to the FOMC minutes at 2 p.m., but we have the hourly higher low at 256.19, the high of the day at 258.91. And if the break of 256.19 occurs tomorrow, daily consolidation will be underway. If that level can hold, we'll be looking at the bulls maintaining their control. So here on the 15-minute time frame, this is the reaction that we had to the FOMC minutes. A bull break into a dump, into a bounce, into a hold of support, and after hours here, breaking support a little bit. But 257.29 is going to be a key level for me. If we open above it tomorrow, that'll be a key support because it was a double bottom into the end of the day. So those are my 2 key support levels right there to be watching into tomorrow, and resistance of 251.98. Why do I think oil is king? And why is oil going to dictate when the market consolidates, in my opinion? And the answer is because the market and oil are significantly correlated. We were looking for oil to mark the bottom in terms of an oversold bounce with oil playing out. In terms of the correlation with SPY's bounce playing out, I pointed out in videos back then how the dump in February of 2016, the bottom was marked by oil and a tweet about OPEC. And the bounces in oil allow for the market to bounce as well. At this point on oil, I'm watching for the potential of a rejection from key resistance and a lower high compared to 54.54. And if that is the case, we're going to be looking at a inverse head and shoulders pattern with the left shoulder. This would be the head. If we cannot break that neckline of resistance, we're going to pull back, look for a higher low, and that would be the weekly trend change if that's how it ends up playing out. First things first, we would have to lose the daily uptrend without breaking 54.54 for that to play out. At this point, oil has now seen 7 green days in a row. The 4-hour RSI, extremely overextended over 80. We have seen no red candlesticks on the 4-hour time frame in multiple days, and we saw the bulls buy the dip in the bearish reaction to the inventory report. So why do I say that oil is king and the market is following oil and not vice versa? Well, if we look at the 2-minute time frame of trading today, and we see the start to the morning, and then the bearish reaction to the inventory report, let's overlay SPY on the 2-minute time frame and see what it looks like. And the answer is, it is very extremely correlated. We had similar action leading into the inventory report. The pullback occurred at the same time. SPY dumped when oil dumped. We then saw oil bulls with a V-shaped bounce into a new high. And that's when the SPY bulls V-shaped bounce right back to the high of the day as well. So in my opinion, if it were the other way around, it wouldn't make sense that the market would dump right when oil did in reaction to the inventory report, because clearly the inventory report was the reason that oil saw this little 10-minute dump here. And like I said, SPY followed right along, and then both of them had the V-shaped recovery into the afternoon. So that tells me that, again, in my opinion, if SPY is going to consolidate on the daily time frame, which we know is due, we have to be looking for oil to consolidate on the daily time frame as well because of the size of the green day today. If we do see oil consolidation tomorrow, it's likely going to be a daily inside bar and just show us a tightening range. The 4-hour uptrend is not going to be lost anytime soon. The last higher low was 48.28. Anything above that keeps the higher lows. As far as the last hourly support, we're going to be looking at 50.57, the bearish reaction to the inventory report. That was the bottom. That's our hourly support to be watching. And again, even if we consolidate, we'll anticipate an hourly higher low to form, at least initially. So even if we do get signs of a pullback tomorrow in the market, I'm going to be a little bit skeptical until we see oil giving clear signs as well. IWM has been on absolute fire this entire bounce. We have not seen much pullback whatsoever, and we're now looking at the last 9 out of the last 10 days have been green, and the one red day was an inside bar. So bulls in complete control. The hourly uptrend still intact here. I'm looking at support of 140, 162 to keep the bulls in full control. Lose that hourly uptrend. We'll look for healthy daily consolidation to form a higher low and to keep the daily uptrend intact. Also want to point out that SPY has declining bull volume on the daily time frame. Unimpressive bull volume on this last leg up here most recently. Something to make note of as well. QQQ, bulls still in control. Hourly bulls bought the dip. Support 159.47, trying to form a higher low at the end of the day at 160.24. So just watching these hourly uptrends into tomorrow. When they are lost, daily consolidation is underway. If we don't lose them, the bulls keep complete control. XLF, daily inside bar, and almost a triple top the last 3 days. So XLF is not participating in the last leg up that we've seen the last couple days with that rejection from 24.55. And if we see a bear break of 24.03, then we're going to know that daily consolidation is underway for XLF. And we're going to be watching both sectors. If the financial sector pulls back and tech stays strong, SPY's not going to pull back much. If we want to see a solid pullback to form a new support level on the daily for SPY, we have to see both tech and the financial sector pulling back at the same time. VIX, still no sign of these bulls, but we know to be keeping an eye out for it. The hourly trend has to change for the bulls to look for a daily level to be set and to bounce off of. And at this point, anything under 2036 is just an hourly lower high. So again, we're looking for the exact inverse of what we're looking for on SPY. SPY loss of the hourly uptrend indicates daily consolidation. VIX change of the daily downtrend, change of the hourly downtrend is going to have a daily bounce start to play out. NatGAS USD inventory report tomorrow, 10:30 a.m. Eastern, is going to dictate, in my opinion, how we break from this tight channel. We have the double top, we have the bulls defending support, and we are just in a tightening 4-hour equilibrium, and we're going to be looking for that break tomorrow to be set. 3076 for a bull break. Bear break would be 2962 and 2906 as the most important supports. Tightening ranges here, hourly equilibrium forming at the end of the day, low, high of the bounce, higher low, lower high. So tightening everything up, and it's going to be a bit of a tight rubber band that's going to snap likely tomorrow in response to that inventory report. So that's where we stand. Another thing to point out, SPY hourly 20-period moving average on the hourly time frame has held 3 tests yesterday, and it held the low of the day test today. So keep an eye on the hourly 20-period. If we start to close below that, we'll be looking at a shift in momentum as well. I'm also watching this 12 and 26-period exponential moving averages, because if we get a bear cross of those levels, that will show me a shift in momentum as well. So when I'm looking bearish, I'm looking at LABD because the biotech sector is extended to the upside. I'm watching SPXX as a potential leveraged bear ETF to play any kind of SPY pullback. And again, it's just a way that I keep the odds in my favor because, like I said, I don't like the risk to reward of bullish entries at these levels, and I'm going to patiently sit and wait for risk to reward trades that I like to come to me. And if they don't come to me, I just won't trade. So that's a way to stay disciplined and to make sure that I'm not chasing moves. You know, if I were looking bearish and then the bulls show up and I start to scramble to try and find a trade, that's not the right mindset to be in. You want to be prepared and have a game plan heading into the day, and that can still look bullish. Obviously, if you're still bullish and want to keep going with the trend, stick with it. Just always use those stop levels because we know some healthy daily consolidation is coming sooner rather than later. So I appreciate you watching. Hope you all had a good day today. We'll check back in tomorrow, see how that natural gas inventory report plays out, and see if the bulls are able to maintain this hourly uptrend that they've been holding for so many days in a row. At the end of the video here, got a little bit of an example of a winter garden. You can still grow a whole bunch of stuff: beets, carrots, kale, collards, brassicas, and it can get down to 25 degrees Fahrenheit, which would be a couple degrees Celsius. And in certain things like kale, that allows for sugar production when it gets frost bitten, and that actually makes the kale taste sweeter. So you have to cover them up with plastic or remade cloth at night to keep them nice and warm, but there are some areas where you can go grow crops through the winter, and that's obviously a sweet bonus to have around.